Hello, students. Have you ever wondered how the prices of goods and services are affected by tax systems in our country? Well, today we are diving into the world of goods and services tax, or GST, which plays a huge role in shaping the cost structure we see around us. Now, what exactly is GST? GST is an indirect tax levied on the supply of goods and services. Simply put, it's a tax that is collected at each stage of the production and distribution chain. You pay it when you buy goods or services, but it's collected from the seller by the government. GST is different from what we were used to in the past. Earlier, we had separate taxes like excise duty, service tax, and VAT, but GST combines all these taxes into one. This is where the idea of one nation, one tax comes from. It aims to simplify the tax system and make it more transparent. There are three main types of GST: CGST, SGST, and IGST. Let's break it down. CGST stands for Central Goods and Services Tax. This is the tax you pay to the central government when a sale happens within a state. Think of it like a local tax, but for the central government. Next, SGST stands for State Goods and Services Tax. This is the tax you pay to your state government, again, for sales that happen within your state. And finally, there's IGST, which is Integrated GST. This comes into play when goods or services are sold between two different states. IGST is a combination of both CGST and SGST, and it ensures that the tax is fairly divided between the central and state governments. So, whether it's CGST, SGST, or IGST, each one is designed to make sure the right government gets its share of the tax. Now, let's talk about the GST rate structure. GST is not the same for all goods and services. It is divided into 5 main slabs: 0%, 5%, 12%, 18%, and 28%. For example, essential goods like unprocessed food or fresh vegetables are taxed at 0%. This makes basic food items affordable and helps keep the cost of living in check. On the other hand, common items that we use daily, like toiletries, fall under the 5% slab. This ensures that taxes on these items remain low. When we move to items like electronics and other standard goods, the GST rate goes up to 18%. That means the prices of these products will increase a little, but not too drastically. And for luxury goods like tobacco and high-end cars, the tax is as high as 28%. So, as you can see, the more luxury the product, the higher the tax. Now, let's understand how GST actually works when it comes to businesses. There's something called Input GST and Output GST. When businesses buy goods or services, they pay Input GST. This is the GST paid on purchases. Now, when these businesses sell their goods or services, they collect Output GST from their customers. Here's the interesting part: businesses don't just collect GST for the government. They get a credit for the Input GST they paid earlier. This means businesses can set off the tax they've already paid against the tax they collect on their sales. So, if a business pays 500 rupees in GST on a purchase and collects 900 rupees on a sale, they only need to pay the difference of 400 rupees to the government. This reduces the cascading effect of taxes. GST is a value-added tax. What does that mean? Let's break it down. Let's say a manufacturer buys raw materials worth 5,000 rupees and adds 2,000 rupees worth of value to it by processing them. The GST on this added value will be based only on the 2,000 rupees. So, GST is paid only on the value added at each stage of the production chain. This is different from the older tax systems where every part of the chain was taxed. The net effect is that the manufacturer pays tax only on the value they added to the goods, making it much more efficient. So, why is GST such a game changer for our economy? First off, it simplifies the entire tax system. Instead of having multiple taxes from different sources, GST combines them into one system, making it much easier to manage. It also eliminates the cascading effect of taxes. Earlier, taxes were added at each step of the production process. But with GST, only the value added at each step is taxed, making it a fairer system. And for businesses, GST makes the system more transparent and easier to comply with, reducing the chances of tax evasion. This benefits not just the government, but also consumers who benefit from lower prices and better compliance. Let's quickly revise what we've learned about GST. Microphone. GST is an indirect tax levied on the supply of goods and services, and it's designed to streamline the tax process in India. There are three types: CGST, SGST, and IGST, depending on whether the sale happens within a state or between two states. The tax rates are divided into different slabs ranging from 0% to 28% based on the nature of the goods or services. Businesses can claim input GST credits to reduce their overall tax burden, making the system more efficient and reducing the tax cascading effect. In conclusion, GST helps ensure that taxes are more transparent, reduces the burden on businesses, and provides a more unified market for goods and services in India. I hope now you understand the key aspects of GST and how it impacts our economy. See you in the next lesson, where we'll explore the next concept in detail.